And should in case you have a question in the class, you can always use the ask question tab if you are in the Google Meeting app. So in the last class, we were about to discuss how to use the MetaTrader trading view or MetaTrader software to execute trades in the market before we add this connection, right? So in this tutorial, in this webinar today, I am going to walk you through on how to execute your first time trade as a beginner trader, right? So this class is for beginner traders, those who are just diving into the market, right? Over the past month now, we have been going through some courses, some topics in the Forex market, crypto, stocks, indices, commodity markets. We have been going through some technicals on how to analyze the market, how to read candlesticks, how to read market structures, demand, supply, support, resistance, trend lines. And today we want to see how we can apply some of the little concepts we've learned, how we can apply them to take trades in the market. So in the last class, I showed you how to download your trading software, which is the MetaTrader. And this is the software right here. I showed you how to download this software. If you are yet to download this software, then please get it on your laptop or your smartphone. But I recommend you guys, traders, to get a computer or a laptop. It shouldn't be an expensive one. With just $50 to $100, you can get one for yourself, right? Just something that can present you a wide screen, and then you have access to a keyboard, right? Great. Now, based on what we have right here, this is the interface of the MetaTrader. We have the MetaTrader 4 or the 5, whichever of this version you download on your personal computer or your laptop. They both have the same function, right? And please take note, you cannot use the login details of MetaTrader 4 to log into MetaTrader 5. The same goes for MetaTrader 5. Login details cannot be used to log into MetaTrader 4. So if your broker issued you a MetaTrader 4 or 5, ensure you use the corresponding login for the right platform, right? I've seen situation whereby traders try to use the login of the MetaTrader 5 to log into the MetaTrader 4, and we are unable to do that because they have different parameters or configuration. Although they provide the same function, but they are still different in terms of login servers, no, right? Now, once you open your MetaTrader, this is the first interface you're going to see. I have a full tutorial video on how you can customize your MetaTrader, so I won't go into full detail into that in this webinar. If you are yet to know how to modify, customize your MetaTrader, please refer to the beginner stage in our Telegram group. I have some series of videos right here which will walk you through on how you can customize, modify your MetaTrader, right? And should the case you have questions in this class, you can always use the comment box to ask me questions if you are in the Google Meeting, or if you are watching from the YouTube or from the Facebook. All right, thank you, students. Now, on this account right there, we have a $100,000 USD. Our balance is $100,000, and our equity is $100,000, and our free margin is $100,000, right? Before I proceed for that, please, I want to know if you guys can hear me, if you guys can see my screen. Please, I need to know before we proceed further.
Yes, I will come here. You can see.
All right, thank you. So does that mean we can proceed further? All right, now you have your balance. This is the amount you deposit into your account. The equity, this is the amount of money available for you to trade, right? So your equity, you show your unrealized profit and the unrealized loss, right? So I have a full tutorial on this, explanation on this, on your balance, your equity, your free margin, available fund for you to trade. I have everything right there in the Telegram group. You can check what all this mean: free margin, commission, swap, spread, all this concept, right? So I'm not going to go into this today, right now. All right, let's go through an asset. Let's open the British pound sterling paired against the USD. So now, based on what we are going through in the forex market, I told you we can buy, sell. When we buy, when the market is going up, when we buy, we tend to make money. If the market goes up, when we sell and the market is going down, we tend to make money, right? Okay, but seems on this price chart, we do not have our time frame. Let me just quickly look out for our time frame. We do not have time frames on this price chart, and we do not have time frames on this price chart. Let's look for the section to add our time frame. The time frame is disappeared. Just look for the, so let's go to the day chart. Now this is the day chart, and in our course we do not have any indicator. Let's see if we can remove the indicators on this price chart. In fact, let's just ignore this indicator. I want us to make use of our time today. We are not trading with indicator. I just want to show you how to trade, right? Now let's zoom out on this price chart. So on this price chart, let's say for instance we have a support at this level. We still have some tools to, let me customize and add some tools right here. Insert, close. So let's say for instance we figure out, let's close this window. Now let's say for instance we figure out a support in this level. Let me just make this to be more bold so that you can see the thickness properly on your price chart. And let's make it to be black so that you can see it properly. Okay, now let's say for instance we have support at this zone, resistance. Let's enable our pen. We enable our pen so that we can make some drawings on our price chart. So we have this right here, our support, previous resistance, a breakout of this resistance, price tested this zone, and currently price is still trading at this support zone, right? Now let's say for instance after price rally to this zone, we want to look out for potential buy setups in the market. Maybe you believe that, okay, as the market is trading at this level, maybe you have that belief that, okay, the market is going to go up. Maybe that is your belief. Maybe you believe that, okay, the market has the probability to go up. Now instead, let me just put this right here. You believe the market is going up based on the previous support, breakout structure, previous resistance, and you believe this is going to be a support for price. Now one of the two you can use to go bullish or long right here, let me show you. Now what you need to do is, if you would like to buy here, let's move this a little bit. Now if you would like to buy at these zones here, what you need to do is to do what? Is to right click on your mouse. If you are trading on your computer, you right click on your mouse, then you move your cursor the way to select one click trading, or you move to trading. If you select the one click trading, a 2 tab will be showing at the left corner of your screen. But I do not like this because sometimes you can mistakenly press on this tab. You can see right here, you can set your sell, your buy, everything right here. But I'm not a fan of having this on my chart because sometimes one may mistakenly, or if you have a little baby or little kid beside you, they could mistakenly do anything on your keyboard or your mouse, and then you keep on, you end up executing a position which you are not ready to execute. So this is why I don't like to have this one click trading on my window, right? So the best thing I do is I just click on the on my mouse, right click on my mouse and move to trading and select new order. Alternatively, the fastest way is to move your mouse all the way, place your cursor on the new order at the top of the screen and select new order. Now once you select new order, the order window will be popped up on your price chart, and there are some parameter settings right here you need to be able to set as a trader. Right now, let's say for instance, after you click on the new order, this window has popped up. The first thing you see on the list is what we call the symbol. Now what does the symbol represent? The symbol means the name of the assets you want to trade. The name of the assets you want to trade. Under this symbol right here, you can see we have British pound sterling USD. That is the pounds versus US dollars. Right? Now, you have to ensure that what you have on your symbol correspond to the asset you want to trade. Let's close this. Now, for us to check the name of this asset, you just have to navigate and check what at the top left corner of your screen. At the top left corner of our screen, we can see we have British pound sterling paired against the USD. Now, once we right click and we select trading and select new order, or if you just place your cursor on the new order and then you go to the order window, you need to make sure that your symbol corresponds to what you have at the top left corner of your screen. In a situation whereby you have a different symbol, like something like a USD Swiss, then it means you are not on the right symbol. So ensure you are on the right symbol. Currently right now, you can see what I selected right here is the Australian dollar paired against the Singaporean dollar. Australian dollar paired against the Singaporean dollar is different from British pound sterling paired against the USD. So you have to make sure you do not do that mistake. Click on your new order. The first thing you do is check your symbol. Okay, is your symbol corresponding to what you have on your chart or the assets you want to trade? Once it's correspond, then the next thing you move on to type. Under this type right there, you select different types of market execution. Right? We have the instant execution or the pending order execution. Instant execution is an order for you to get into the market at the current market price. Instant execution is an order for you to get into the market at the current market price. I have a tutorial video on this, and I've instructed you students, traders, to watch this video. So by now, if you do not understand this concept, I am not going to repeat myself right here, because I've given you the video to watch the videos, right, so that we won't keep repeating or wasting our time on this concept. If you are yet to watch the video, please just get a pen and a paper right now so that you can put these words down. You can put these definitions down. Because right now we are getting into the technicals of trading. We are not getting into the real concept of trading. Right now, what is instant execution? Instant execution, it's an order for you to buy at the current market price. Now, what is current market price? On this price chart right now, the current market price of British pound sterling paired against the USD is 1.30118. It means for me to purchase the British pound sterling, I need 1.30117 US dollar. For me to purchase one British pound sterling, I need 1.30119 USD for me to be able to purchase the British pound sterling paired against the USD. Right? Now, this is what these price levels mean. It means the cost of one British pound sterling in terms of USD is 1.30119. Now, I'll right click on my price chart, click on trading, or just click on new order, and then once I see that, if I'm comfortable to buy with this price level of the 1.30119, then the next thing I have to do is what? I just have to select instant execution. If I'm not comfortable to buy with this instant execution, then what I need to do is to set what we call the pending orders. Let's go back to the order window. We click the new order and then we see the type. So under the type, we have instant execution. I'll repeat myself again. Instant execution is an order to buy at the current market price. That is the price, the cost of an asset at the moment. Now, if you're not comfortable to buy based on the current market price, maybe you believe this price of the 1.30119 is too expensive for price. Maybe you prefer for price to push all the way down to a lower price, or maybe you prefer price to go up for confirmation before you buy. Then what you use is what we call the pending order. Pending order. So pending order is an order to buy at a future price which may be lower or higher than the current market price. Pending orders are future price. Pending order are what? Future price. F-U-T-U-R-E. They are future price, to buy at a lower price or at a higher price, or to sell at a lower price or at a higher price, which means we have different types of pending orders. Right? Let's get this down. So now let's get back to the window. Now we click on the new order and then we click on the type of order. We select pending order. Now you can see under this pending order, once we select pending order, we have another type box which is shown to us. Now under this type box, we see the different types of pending order. These are the types of pending order. Now let's clear this off again and let's try this again once time. Now we click on the new order and then we see instant execution. We are not comfortable to buy with the instant execution, then we click on pending order and we have a new tab which shows us about buy limit. But the buy limit is not the only available pending order. We have lots more pending order, right? Now these orders are orders to buy artificial price. Okay. Now before we move on to pending order, let's see how market execution works or instant execution works. Let's close this window. Let's try it again. New order. Let's click on instant execution. We are comfortable to buy with instant execution. Then we click on instant execution. Then the next stage is volume. Volume. This is the amount of assets you want to buy. We have one lot. One lot. We have 10 lots. We have half lot, 0.5. A standard lot size account is $100,000. This account of 100,000 here is what we call the standard lot trading account. A one standard lot trading account size is $100,000. So if you execute one lot right here, it means on each 1 pip, what do we have? We've discussed this in the class. I want someone to give me answers. We've discussed this in the class. I remember the last day I was discussing this in the class. Some people were just not paying attention. So tonight is question time. How's your question? Someone there to give us answers? If you are trading a 1,000, a one lot standard account, if the market should move 1 pip, what does that mean? If the market should move 1 pip, what does that mean?
On standard lot.
Yes, on standard lot size account, if you execute one lot,
$100,000. That's $100,000.
I'm talking about lot size. What is the value of 1 pip move? What is the value of 1 pip move if we execute a one lot account size or one lot position size?
Okay.
Let's practicalize it here. I know you have all forgotten that.
$1,000.
I didn't. That wasn't what I told you. You guys always forget everything we discuss. Everything you always forget. You forget everything. Now let's say for instance, you execute a one lot size in this account. You go to new order and you execute one lot size, and you set your stop loss to be 129,570 and then you target 1.33. That's our first time executing a trade. Let's see this. What are you seeing on the screen right there? What can you see on the screen right there?
Minus $536.
Okay. What about the points? I'll show it again. What about the points?
Minus $536.00.
Points. That is profit.
Point is minus 536.
All right. So we ignore the last figure because our price scale is in 5 decimal places. So we are not dealing with pipettes. I already told you about pipettes. Now we are getting into the real of trading. So everything I told you, see that you go back and reverse all those things. Now we have 1.00000. The decimals right here is 5. 1, 2, 3, 4, 5. Right? The last one here is pipette. Pipette. Alright? And the fourth one is what? Pip. The fourth one is pip. Percentage in points. Why the pipette is the smallest unit of a pip. 10 pipette equals to 1 pip. Right? Now we do not need this pipette. Some brokers will give you 5 decimal places, while some will give you 4. So we need just 4. So if your broker gives you 5 decimal places, whenever you are taking your measurement, you always ignore one figure of the decimal places. Let's go back to the price chart. Right here we have, under the point we have minus 536. So under the point you ignore the last digit. So you now have minus 53. Because your chart is given in 5 decimal places. But if your chart is given in 4 decimal places, what you will see right here will be minus 53. But the reason why you are seeing minus 536 is because your price scale is listed in 5 decimal places. Is that clear? Now, we executed a trade right here for a buy, and then we placed our stop loss at 1.29570. Now, what we are seeing right here is our stop loss to our entry level is minus 53. And our profit is minus $536. You only ignore the last digit on your points, but you do not ignore any of the digits of your profit. Is that clear? Now, we have minus $53. It means 53 points gives us $536. Now let's do the calculation. I want you to understand the concept. That's why I didn't want to just give you the direct answer to that question I asked. If $5,306 equals to 53 points, then what does each pips move mean? It means if we divide 536 divided by this, we have almost 10 ... So it means on each 1 pip on a standard lot account of 1 lot, each 1 pip is what? $10. It means on a $100,000 account, which is standard lot account size, if you execute a 1 lot position size on each 1 pip move in the market, that is what? $10. Now, if the market should move 53 pips, that is what? Times 10. That is what? $530. So that is what we have right here. It means from our point of entry here to this level here is 53 pips. Now 53 pips times 10. That is what? That is $530. So if the market should come down 53 pips, we will lose $530. That is for one lot standard account. Now, if you initiate 0.5, it means on one pip move, that is what? $5. If you initiate 0.25 on a standard lot size account, on each one pip move, that is what? And if you initiate 0.1, one pip move equals to $1. Now let's check another tools we can use to do this calculation. One of the tools you can use for this calculation is what I call the risk calculator. The link is in the group. You go to this website. You click on pip value. Your account currency is USD. Your account is, you are trading Forex. You select the asset you are trading. We are trading British pound sterling paired against the USD. We search it, we select it. Our position size is maybe one lot. You can see that. If you are trading one lot, each price of pip is what? $10. So this website will help you easily to calculate the value of your pips. If you take two lots, one pip move with what? $20. Please, before I proceed forward, are we getting this point? If you're not getting me, please let me know, because this is the foundation of risk management. If you don't know this, even if I give you the best and the best trading signal or trading setup, you will fail. If you don't understand this, let me know now, because I can give you a trading signal and I will have profit, and you may fail if you don't understand this concept. Because if you don't understand the concept, you will set your stop loss and your take profit the wrong way, and you will make loss. Please let me know before we proceed now. If you do not understand this, raise up your hands. Let me know. Signify. Can we go on? Okay, no problem.
Well, I'm having connection issues though, but I will go back to the video later. Just continue.
So, I will repeat myself again. I said, if you have a standard lot size account, a standard lot size account is $100,000. Now, if you initiate one lot size position on this one standard lot size account, take note, I do not mean $100,000 should be in your account. During your process of creating or registering your account, your broker will present you with different account types. We have standard account, we have, I think the next one should be macro. Is it macro or mini account? I think it should be mini account followed by macro. Is that right? After mini, I think we should have micro. Let me verify that, but I'm not a fan of all this.
Yes.
Am I right?
Yes.
You're right. Then nano after macro.
Okay, thank you. So after macro, we go on to some, these are nano.
Nano, yes, nano.
And then after nano, we have all this cent stuff all the way down, but not all brokers offer this cent stuff. Now let's explain this standard, mini, micro, nano. I think we need to explain that. Let's go to our whiteboard. So we have standard account. Standard account right here means this is an account whose value start from $100,000. Mini account start from $10,000. Micro start from $1,000. And nano start from 100, and I think cents, that will be 10. Now you can see. Now if you are operating a one standard lot size account, one lot size account here, it means on each price move, on one pip move, you have what? $10. One each pip move, if you initiate one lot size account, that is $10. On mini account, if you initiate one lot size account, that is what? $1. On micro account, if you initiate one lot size account, that is what? Can someone give me an answer to that?
0.1.
Thank you. Now on nano account, if you initiate one lot size account,
0.01. 0.01.
and on cent account, I don't even know how we put this one now.
0.0001.
Thank you. So you can see that. So there is no how you can trade this type of account that you ever make money. You just see the market is going. You just be seeing 0.001. The highest you can make here maybe is 2 cents. Now it means if the market should move 100 pips on this one, you make $1,000. That is 100 times 10. Remember, 1 pip is $10. So if the market should move 100 pips, you make yourself $1,000. Now on this one, if the market should move 100 pips, that is $100. Now if the market should move 100 pips on this one, that is $10. And on this one, if the market should move 100 pips, that is $1. And on this, you are seeing the cent. You are seeing a cent. You see that? Now remember I stated earlier that you don't necessarily need to deposit $100,000, $10,000, $1,000 into your trading account. Now this is how you can switch your position size to correspond to this account size here. Now on your trading account, you have one lot. If you choose one lot on a standard account, it means on each one pip move, you will be charged $10 minus, or you'll be giving $10 plus. And on 0.10 position size, it means on each one pip move, appreciation or depreciation, that will be positive $1 or negative $1.
That is on a mini. Now on a micro, that will be 0.01 position size. On nano, 0.001. On cent, 0.0001. Now let's go back to this trading view or this platform. But not all traders offer this type of nano and cent. The least or the popular one you can see is starting from 1 lot to micro. So you either have 1 lot 1.00 or 0.1 or 0.01. It's so rare to see 0.001. But let's check this at MetaTrader. Let's see what they offer us. Now on this MetaTrader here, let's click on new order, British pound sterling USD, Eastern market execution. Now let's see the volume. Now on this volume you can see we have what? 1.00. This is a what? 1 lot account. Now if you want to trade mini, it will be what? 0.1. You can see that. This is a mini size. If you want to trade micro, that will be what? 0.01. You can see that. Now let's see, maybe we can trade lot, mini and micro. Now let's see, maybe we can trade nano. 0.000. No, we can't go nano here. The least position size we can trade there is what? 0.01, which is macro. Which is what? Macro. Now, our entry here to our stop loss here is 53 pips. Because we initiated a 1 lot position size, this is it right here, volume. That is why our stop loss 53 pips is multiplied by 10. That is why we have minus 53. And if the price should go 100 pips, let's measure 100 pips, 100 pips. Remember, you do what? You ignore the last digit of the point, but don't ignore the numbers of the profits. Remember that rule. Now what can you see right here on my measuring tool? We can see 975, right? Now let's make it to be 1000. So that 1000 will be what? 100, because we are measuring in pips, and our broker gave us measurement in pipettes, so we ignore the pipettes, so we focus on pips. So this is 100 pips. Now if our profit should get to this high here, if our TP is here, that is 101. Let's make it to be 100. Okay, if our take profit should get to this level with 100 pips, that is 1000. I think this is around 101 pips. Now let's initiate 0.010 and see the differences. Although we have made some profit here, like $13. And now the question now is, how much pip is this $14 profit? Can someone tell me in the class? How much pip is this $13? How much pip movement? For us to have a $13 on a 1 lot position size, what does the $10 mean in terms of pip?
3 pips.
No. Do you understand my question? The market is giving us $12.
0.3.
No. If the market is giving us $11, say, as profit, and we initiated 1 lot size,
Okay, I think it's $30.
it means
$30.
what are you all saying here? It means the market has moved.
10 pips.
Come again.
I said 10 pips.
Why are you all saying this? I told you 1 pip move is $10. I told you 1 pip move is $10. Why are you telling me $30, $40, $50? It means the market have moved 1 pip.
I think it was $13. If you have made $13, that means we multiply it by 10 since it is 1 lot size.
one lot size. If the market should move 1 pip, let's go back. Since we do not understand this concept right here, $100 pips on a one lot size is times 10, giving us $1,000. On each 1 pip you move is $10 on the one standard lot account size. If you move 100 pips, that is $1,000. Now, if the market is giving you $10 as your profit, what does that mean? It means you have moved 1 pip. If the market is giving you $13, it means you have moved 1.3 pip. Is that clear?
Yes, sir.
$15 now mean what? 1.5 pip.
1.5.
Now let's initiate a mini account. On a mini account, let's go to new order, and then let's go to this and let's change it to 0.10 and let's buy. Let's move our stop loss. Let's go to the, I think I am not even, let me set it right here. Modify and place it to be 2, no, 2.9. Now I want you to study what we have right here. What do we have here? What do we have right here?
69.
$69.9 for a point of 69 pips. You can see that. If we had initiated a one lot size here, it will be what? $690 for $69. But because we initiated mini account, on each 1 pip move is $1. So for 69 pips, that is 69 times $1. That is $69. Now let's initiate another position of macro account. Macro account will be what? 0.01. Let's put our stop loss at 29.5. Now, what can you see here? 8 minus $8.6 for what? For 86 pips. It means for each 1 pip move, we are having 10 cents. Now 10 cents times 86, that is $86.65. Is this clear to us, or should I repeat myself? I'll repeat myself again. Everyone is just quiet tonight now. Everyone is now quiet. No one is shouting, hey, let's go on to the next class. No, let's go. No. Everyone is quite quiet tonight now. Standard, is that right? For now, let's just forget about nano and cent, because we can't see nano and cent on this account here. We are unable to operate nano and cent, so we focus on standard, mini and macro. one lot size for 100 pips equals to $1,000. 0.1 lot for 100 pips equals to what? $100. 0.01 lot size for 100 pips equals to what? $10. If you are going to nano, which we are unable to initiate on that platform, is what? $1. If you are trading cents, that is what? For 100 pips. Now you can see the reason why I said during your broker's account registration, don't choose cent account. If you choose cent account, you just be trading with us, you will not make any money. By the time we are making 100 pips, and our 100 pips is $1,000, and others are making $100 and $10, you will be making 10 cents. You will just be 10 cents and cent and cent. You have nothing to show. So if you have selected 10 cents during your account creation, go now to mini account or macro or standard account. Do you understand that point? If you have selected cent or nano, open another account. I do not mean you have to register another account. Log in into your account and select new MetaTrader account and select standard lot size, or better, select professional account, zero spread account, or premium account. Out of those series, all those ones, they are standard lot size accounts. Do you understand me? So do that tonight, because if you open a cent account, you will just see others are making money while we are making 100 pips for $1,000 and others are making 110. You just be making 10 cents, 10 cents and 10 cents, unless you increase your position size to like times 10 lot, 100 lot. That doesn't make sense. So do you have question? We are not yet done though. We continue this in the next class, because I can see now every one of us in the class, we are all just quiet. We are quiet right now, we can't say anything. All right, so we continue from this place tomorrow on Friday, and then please let's get to class on time. Once I start the class, no more waiting for anybody. If I can't see anybody in the class, I'll just put on the recording software and I'll keep on with the class. I won't wait for anyone. The time for waiting for students has gone. This is a new era. Okay, thank you. So do you have question?
Yes, sir. What is average cost?
Average cost?
Yeah.
Let's clear this off. With the name average cost, when we say average means the half of something. Half of something. Now when you are getting average cost, it means you are getting half of the cost of the value of that asset. In Fibonacci 2, we have average cost, discount cost, and premium cost. So we are yet to get to this section, but let me just show you what they mean. Average cost, let's say from this level is 1 to this level is 10. The average cost of this movement is what? 5. That is the average cost. Now in stocks, you hear the word average dollar cost. Average dollar cost is a type of trading strategy in which an investor keeps on investing a certain amount of money upon each price advancement. we are still going to talk about this in our later course. So but for now, as a beginner, so that I don't just scatter your understanding now, just know average cost is like the midline of a value of midline of the value of an asset. So when we say average, the half of the cost of an asset, so that is it. And we have that level in Fibonacci. Now let me show you that level in Fibonacci. We are still going to discuss about Fibonacci. We have a 2 called Fibonacci. This is the 2 right here. If you apply it here, let me change the color to levels to black so you can see it. You can see this. Let's move this up. Can you see this? This is starting from 100. Forget all the 0, 1.61. From 100 to 0. The average cost here is the 50%. And the discount price is what? 61.8, which is the golden number. And the premium level right here is 78.6. We can modify this to give us our 78.6. We are still going to discuss this under the later section, not now. Okay? We are not yet ripe or fit for this section. But if you are if you have been studying on this, that is good. But I just want you to follow the step, one step at a time. We don't have to jump. But if we jump, it's not about how fast, it's about how well. So once we start initiating our price, then the next thing is how you can take average price, average cost. And one of the tools we can use for average cost is our Fibonacci. We have the Gantt tool. We have a lot of tools. But personally, I use the Fibonacci retracement tool. Okay? So for now, let's know how to initiate our first trade. How to set our stop loss, take profit, our volume. Right? But for now, average cost price is like the midline. The division of a price into 2. You take the half. That is the average. Okay? Now you can see right here we are in minus. $39 means what on the standard lot size account? It means what? 3 pips or 4 pips have been moved. You can see when a 1 lot size trader account is losing $39, a mini account trader is what? Is losing almost 6 pips for $5.90. And the $0.01 lot size account is losing what? Just 58 cents. So that's the difference. When we are losing, the cent trader or the macro and the mini trader, they are losing small, and the standard lot size account will be losing big. Likewise, when they are making money, the standard lot size account will be making big money, followed by a mini, followed by the macro. Right? Do we have any other question? Confidence, ask your question.
Yes, sir. Sir, my question is, when creating an account, what's the meaning of that leverage? It will be like 1 ratio 200.
Leverage.
What's the meaning?
Leverage means loan. I've discussed this. I told you when you are giving a leverage ratio 1:1 means you cannot take a loan on your broker. Ratio 1:10 means if you have $1, you can control or you can take a position up to $10. Ratio 1:100 means if you have $1, you can take a trade up to what? $100. Ratio 1:1000 means if you have $1, you can take a trade up to $1000. Now, based on the concept of our pips, if you have $1000 in your account, the maximum you can take on this account without a leverage, you can only use You can't go above more than 1,000 on this account. Cause if you have 1,000 right here, I'm trying to explain in the simplest form so that you understand it. The minus on your account cannot go below more than cannot go above minus 1,000. Which means on this account, if you initiate a one lot size account, it will take 100 pips to finish this account, right? Now, if you now take 10 leverage, it means instead of having 100 pips to clear out your 1,000, you only need what? 10 pips to clear out your 1,000. Is that clear? So that is leverage. And if you take 100 leverage, it means you need just 1 pip to clear out your account. And if you take 1,000 leverage, it means the market will not even move before your account is down. So that is it. Thank you, traders. I'll see you in the next one.